want to make sure we get a chance to talk about some of the stuff that you're doing too, Jason.
Who gives a shit about what I do?
I do.
I've alienated any potential customer with this call anyway, with this show. But I want to go because this agnosticism. I think we all have a deep love for maybe like commodity trend following because of the Gnosticism of like that kind of strategy. And I was just like kind of pulling up positions today. It's been interesting. Like you guys are seeing, we're still like a lot of long energy, but I don't know about you guys, like how many different bunches of look backs you run. But it's interesting to see that, like, to me, like the shorter time frames are starting to take profits on that long energy position. I mean, there's short bonds everywhere. Metals are flat, grains are mixed, because that's the beauty of all this diversification. But what I want to bring up, that I thought was curious, and this is what's great about trend following, is like your rational mind sometimes can't comprehend a lot of the positions. Is like I'm seeing things like long FTSE and Hang Seng, which I have no idea why. It's just curious, right? But then there's like things like long Brazilian real and long Mexican peso. But you go, oh, maybe that's a commodity play. But at the same time, we've seen short CAD and no position on the Aussie dollar. So it's like, what the fuck? Like, but that's kind of the joy of watching a trend following program.
I mean,
it doesn't require
you dream of those types of dynamics in your trend following portfolio, right? The worst times in trend following is when all of your positions are on the same side of the trampoline. Right, like, so you've got your energies on, you've got your coppers on, you're long all the commodity currencies, your short bonds, your short long duration equities, right? Those are terrifying periods because if any sort of corrective action, you're going to be severely punished. But the great thing about and I do think that a lot of kind of pure trend strategies are still a little bit heavily concentrated on the inflation trade at the moment. Certainly, I mean, our largest position, I think, is short copper and has been for a couple of weeks, maybe 3 or 4 weeks, which is definitely a difference from. And by the way, when I say our largest, that's like for our active sleeves, right? Not for the core sleeves, but so I love it when you've got a situation where you've got, one commodity currency you're long, one commodity currency you're short. You got a couple long energies, a couple of short energies, or your long energies and your short metals. Like this type of balance, I think, is where you can more easily sleep at night as an active manager, because again, you've got sort of diversity of bets. But I want to come back to what you said. You keep saying commodity trend. What the fuck is commodity trend? Okay, that's not a thing. Okay, there's diversified trend following. There's no right. You need to trade all of the commodities, equity indices, bond indices.
Yeah,
currencies.
I agree with you.
This is my fucking dog whistle, right? So there's no such thing as commodity trend. It's just like diversified global trend.
Yeah, I think, well, I just use it because of CTA and then because of Chris Cole, but also, like you said, like, yeah, we try to find managers that trade at least 40% commodities, but as you know, that can be across the board. But like, I've always argued, you actually, like you said, you want rates, you want FX, you want the indices, you want bonds, because like all of those things, like the short bond position right now is crushing it, and everybody didn't think they could make money on short bonds. Like, so I'm in complete agreement with you. But like, once again, I think, well, the worst part is like what you're hinting at is like, what is it? Is it CTAs? Is it trend following? Is it commodity trend following? Is it managed futures? Is it crisis alpha? They have a terrible naming convention. They've always been terrible about marketing that general product, and that's kind of always the problem.
And also the fact that you talk about futures and everybody's like, yeah, that trend factor. Why?
Yeah.
It's such a weird universe to have been given. You say managed futures, CTA, whatever you want, it's always trend. And I tweeted today, it's like the equivalent of saying, oh, you invest in the S&P 500, well, you're a value manager, right? You invest in those stocks, in that pool of stocks, you must be value. No, there's growth managers, there's quality, there's, a wide variety of styles. And the same applies in the future space. And we got to find, I either want to take back managed futures and remind people that everybody's different. That when they talk about the dispersion and CTA trend, it's because they're not all trend. Like we barely have it. Like we have a trend, a large portion of trend, but seasonality. We have carry, mean reversion,
relative
value, right? Ball, like it's these are different styles. And why do we pigeonhole every managed futures manager to being a trend manager? when what you actually want is continue to expand that diversification away from a single trend manager, which for 10 years has been a lot of pain, right? Not necessarily
lost decade.
losing a lot of money, but it's been like low single digits, right?